Hey guys, it's that Dividend guy coming at you with another stock market news update. So I just saw this article and it really caught my attention. So I've been trying to cover as much EV news as I can, electronic vehicle news as I can, because there seems to be a debut every day. I've covered Tesla on the channel. I've talked about Neo. I've talked about Workhorse a little bit. Talked about Li Auto when they debuted. This is really interesting though. Chinese EV maker Xpeng shares jump 54% in the New York Stock Exchange debut. Chinese electric vehicle maker Xpeng Inc. shares jumped 54%, so they gained more than half of their value in their debut on the New York Stock Exchange on Thursday, so today, after raising 1.5 billion in its upsized initial public offering. Shares of Xpeng, which counts Chinese e-commerce titan Alibaba and Xiaomi Corp among its backers, opened at 23.10 per share on the ADS, up from their raised offer price of 15 per share. So they jumped quite nicely. Um, One issue that I'm having with the EV market, and I'm sure a lot of people are, is there's so many of them now. You have Tesla, which I think is in the forefront. You have Neo, you have Workhorse, you have Li Auto, you have SHIL, LL. There's just so many. Now we have one from Alibaba. Honestly, when I hear of all these EVs being, you know, um, making their debuts, one, you have to think, do they have any product? Which, according to this article, I didn't hear anything about products from them yet. And are they profitable? So, and I know a lot of EV people or EV investors don't really care about profitability because it's about the future projections. But the thing is, if they don't have a product, I'm not interested. So unless I see a product from Alibaba, I'm not going to be from Xpeng and Alibaba in the EV market that actually is projected to sell. I'm not buying it. So, but one thing that I will say though is just like with Warren Buffett when he said like way back when he was picking car companies and there was 100 of them and he didn't know which one was going to be profitable. One way you can still get this play as an EV play without getting direct exposure to it is finding a company that owns a piece of an EV company, like that has a percentage of the company, like what Berkshire Hathaway has in like Coca-Cola or something like that, or what Altria has in Kronos. Find a an already profitable company that has a big stake in say, Xpeng or Tesla or something like that, and an EV play that you're interested in. Don't get direct exposure, get exposure through another company that isn't completely dependent on EV. So, like, let's say they offer an SUV and it tanks, and you lose money on it because, you didn't understand the financials or whatever. Let's say now you lose your money directly, right? But if you own, say, Alibaba that has Alipay, the biggest e-commerce store in or e-commerce website in Japan and or China, and a bunch of the super diversified. You can't go through all of everything Alibaba owns. They're just like Amazon. But you could get exposure to this company because Alibaba backs it. So if you want to get into the EV market, because I do, I want to own Tesla. I'm waiting on the stock split. But just like I did with Kronos, because it's a weed stock, and like what Warren Buffett said, he couldn't tell what car manufacturer was going to be big. I didn't know which one of the weed stocks was going to be big, but if Kronos was it, then I'd make money off of it through Altria Group, and if it wasn't, then I didn't lose any money by having my money directly in the stock. So if you're uneasy about the EV market because there's so many um, companies coming out with EV offerings, from GM to Ford to Lee to Tesla to now Alibaba's got one. If you're worried about picking the wrong stock, then pick a stock that has exposure to it but isn't dependent on it. So like if Kronos if Kronos doesn't work out, Altria is fine. That's not their main business segment. But if it works, they're going to make money off of it, just like Alibaba. If Xpeng doesn't work, they're not really, they're going to care obviously, but it's not going to destroy the business. You're not going to be overexposed because Alibaba is going to make money through its other segments of business operation versus just the EV play that they decided to debut. See what I mean? So it's an interest. It's a different way for you to get exposure without being overexposed to something in case it fails. But anyways, guys, apparently Alibaba's in the game now too. Let me know if you know of any products that they're offering. I know that they just debuted, but Alibaba's a really well-run company, and they wouldn't debut. I feel like they wouldn't debut if they didn't have something to offer product-wise. So if you know of any specs or cars or anything like that that this company is producing or planning to produce, let me know in the comments below. I am a big fan of Alibaba. I've actually thought of buying Alibaba simply because the price is so much better than Amazon. I mean, it's cheaper, and I feel like it serves just as much of a purpose over in China as Amazon does here. But let me know, guys, if you plan on buying it, and maybe you want to do the Alibaba strategy, because that's what I'm thinking about doing to get EV instead of Tesla. But thank you guys so much for watching. Remember to hit the subscribe button on my channel, That Dividend Guy. I do portfolio updates Monday through Friday. I do stock market news. I do EV stuff, EV videos. I do Warren Buffett portfolio reviews. I do earnings reports, and I do a bunch of stuff. So if you guys are a fan of the stock market in general, you definitely want to be subscribed to this channel. So with that being said, guys, I'll see you in the next stock market news update. Take care. I'll see you then.